Welcome to BD Daily Finance News Podcast, your daily briefing on finance and investing. It is 2026, June 1st, and the market is acting like AI chips are espresso shots for your portfolio.
And some portfolios have clearly had 6 espressos and no breakfast. Today we have Nvidia pushing into PCs, chip politics getting spicy, retail traders chasing private companies, robot IPO dreams, and a crypto dividend wearing a tuxedo made of risk.
Story 1. Nvidia announced a new AI chip for personal computers, and Jensen Huang called it the reinvention of the computer. A separate report says the ARM-based chip will power new Windows laptops from Microsoft, Dell, HP, Asus, and others.
The simple version. Your laptop used to be a bicycle with a calculator taped to it. Nvidia wants it to become a tiny AI scooter that says, I can summarize your meeting and judge your spreadsheet choices.
For investors, the key point is not just the chip, it is the ecosystem. Chip maker, PC brands, software, enterprise workflows, and maybe a new upgrade cycle if businesses decide local AI is worth paying for.
I agree. But here is where I throw a wet blanket made of compliance paperwork. The New York Times reports that China's military sought Nvidia chips for years, based on 6 years of procurement records. And that pulls restricted U.S. technology into the spotlight again.
That is the disagreement of the day. I think the product cycle can still matter more for earnings, while you think regulation can kneecap the party before dessert.
Exactly. If a stock is priced like a superhero, even a normal regulatory traffic ticket feels like a villain origin story. For normal investors, the action step is simple. Do not let one AI theme become your entire personality, portfolio, and retirement plan.
Story 2. Bloomberg says retail traders are diving into private markets, chasing shares of SpaceX, OpenAI, and Anthropic. The appeal is obvious. People want access before a blockbuster IPO, not after the confetti cannon has already fired.
It is basically trying to get backstage at a concert by buying a wristband from someone in the parking lot. Maybe it is real, maybe it is expensive, and maybe security asks why your financial plan smells like nachos.
The finance behind it is liquidity. Public stocks can usually be sold quickly, but private shares may come with restrictions, opaque valuations, wider fees, and limited information. Growth opportunity is not the same as easy exit.
Story 3. Unitree Robotics cleared a key hurdle for a Shanghai STAR Market IPO after passing a listing committee hearing. The company filed on March 20th, went through 2 rounds of regulatory inquiries and an on-site inspection. And now the humanoid robot wave is looking very investable and very sci-fi.
This is where I reverse myself a little. I usually tell people not to chase shiny hardware stories, but robotics is a real productivity theme if it lowers labor bottlenecks in warehouses, factories, and services over time.
Look at you, emotionally maturing in public. Still, investors should ask boring questions. Revenue, margins, customer concentration, cash burn, and whether the robot can do more than walk dramatically across a trade show floor.
Story 4. CoinDesk reports Strategy held the STRC dividend at 11.5% for the 4th straight month. A double-digit yield gets attention, but yield is not magic. It is compensation for risk, structure, volatility, or all 3 showing up in a trench coat.
For everyday personal finance, treat high yield like a dating profile that says, no drama. Verify everything. Understand what pays the dividend, what can interrupt it, and whether you can handle the price swings without panic selling into a couch cushion.
Quick recap. Nvidia's PC chip push may widen the AI market. Chip politics adds risk. Private markets demand liquidity discipline. Unitree puts robotics IPOs on watch. And high crypto yield needs hard questions. If this podcast helped your investing brain feel less foggy, like, subscribe, and tell us which story deserves the fortune teller crystal ball next.